Last week, we warned everyone. The NASDAQ broke an important support level, and we said more losses might be around the corner. We also said something many traders forget. Sometimes the best trade is no trade at all. Now, look what happened. QQQ failed to reclaim its 20-day EMA and fell just as we said it could, ending with a massive 3.5% drop in one day. But here's the best part. While many traders lost money, our MTG Tribe members kept their money safe. They're now ready for the next potential opportunity to make profits. How did they do it? We're about to show you. Welcome to our powerful analysis that explains the recent NASDAQ decline and what might happen next. We'll show you how our expert method kept MTG Tribe members' money safe while others lost. You're about to learn how to spot early warning signs in the market and know when it may be safe to buy again. This isn't just analysis, it's your guide to making more consistent profits and potentially avoiding big losses in a tough market. I am Deron Wagner, founder of Morpheus Trading Group. With me is our head stock analyst, Rick Pedicelli. We have more than 50 years combined experience in the markets. Rick will explain what happened with QQQ and the NASDAQ and how to know when it may be the right time to get back in the market. If you want to stop losing money in surprise market moves and start trading like a pro, press the like button and subscribe now. You'll thank yourself later. Get ready, because we're about to look at the charts and show you what may be next for the NASDAQ. This is the kind of knowledge that helps traders make money instead of losing it, by knowing when to trade and when to sit on the sidelines. And now, here's Rick.
Thank you, Deron, for the introduction. Let's get to the charts. So just a quick review of our last video. We covered a few warning signs. First up, we mentioned the break of the 20-day EMA in the NASDAQ 100 ETF QQQ after an extended move up. This break of the 20-day EMA was also accompanied by RSI divergence, where the price action made a significant higher high, and the RSI did not make a higher high, it made a lower high. So that was another warning sign. Also, we mentioned that the technology ETF XLK last Wednesday also broke down below the 20-day EMA, also was showing RSI divergence, a lower high in the RSI versus higher high in price. And then we also showed a chart of SMH. We have the break of the 20 and the lower high in the RSI versus higher high in price. So with all three of these charts breaking down below the 20-day EMA with RSI divergence, we felt the odds were increasing for further weakness in the market. However, we mentioned that whenever the price action breaks below the 20-day EMA in a strong uptrend, we want to give it a few days to see if the price action can recover back above the 20-day EMA and potentially reclaim its uptrend status. Unfortunately, that did not play out in QQQ, as the price action bounced higher for a few days after breaking down below the 20-day EMA late last week on Thursday and Friday. It fell through to the downside. There was a 2-day bounce, which stalled at resistance from the declining 8 and 20-day EMAs. Remember, the 20 EMA was support. Now it's acting as resistance. Both moving averages rolling over. The NASDAQ gap lowered today and broke down below a big support level at 474 and sliced through the 50 EMA, which is often what happens when conditions are really weak. Support for moving averages work really well until they don't. At some point when the market is ready to sell off, it'll just blow through these moving averages with no problem. As we see here, the price action sliced through the 20. Next few days confirmed lower, bounced, and then sliced right through the 50. No pause at all. So with the NASDAQ 100 below the 20 and 50-day EMAs, the 50 EMA is basically our line in the sand for bullish action. The 20 EMA is the line in the sand for a very strong bull. That's where we want to be aggressive when the NASDAQ is above the 20 EMA. Take our foot off the gas pedal when it's below the 20, and then see if the 50 EMA can provide support. If the price action can hold the 50 EMA, great. We'd wait for the chart to bottom out and for a possible downtrend line to break, and then the price action to move higher. But as we see here, the price action sliced through the 50, so we might see a deeper correction here in QQQ. There's quite a bit of support around this 448 to 440 area, and that could be the level that QQQ eventually tests before bouncing higher. But, we never know. We'll take it one day at a time. Today's slice through the 50 MA definitely says that it's time to, be extremely cautious, as bad things tend to happen below the 50 MA, as we saw back in April as the price action sliced through the 50 and went lower. And we also want to show that XLK also broke down below the 50, as did the semiconductor index. So these charts now are transitioning from strong uptrend to corrective action, and we'll be monitoring the price action for an eventual, a bottoming out, and then the chop, and then a downtrend line break, as we mentioned a few minutes ago. With the NASDAQ more than 8% off the highs, it's likely that we're going to need to see some sort of follow-through day to get us back into the market in QQQ, or the NASDAQ composite, which also sliced through the 50 and is 7.5% or so off the high. So this is a deep enough correction to warrant there being a follow-through day for us to give an all-clear signal on the long side. What that is just a rally of 1.5% or more on day 4 or later of a new rally attempt. And we found over 2 decades that the follow-through day concept still works really well. And we can begin to put on exposure prior to a follow-through day. But generally speaking, we don't want to put on too many positions prior to that follow-through. Maybe we want to dip our toe in the water with a position or two in something that's showing great relative strength. But overall, we're still looking for that follow-through day to print before we take on a significant long exposure. So again, that would be on day 4 or later of a new rally attempt, where the price action is no longer setting lower lows on the daily chart. And there's a possibility that we may not see a fall through day. If there isn't a fall through day, but we do see the NASDAQ composite or NASDAQ 100 reclaim the 50 MA and set a higher low, we could use that reclaim of the 50 MA as a buy signal or an opportunity to put on some long exposure and test the waters. But, we're definitely looking for a strong follow-through day to put on a significant exposure. In our nightly report, the Wagner Daily, we have a model portfolio, and that model portfolio has been in cash for the most part since July 17th. We had a small 2% position on in NVIDIA, and that's the only position we had on for the past week. And prior to stopping out of several positions on the 17th and going to 98% cash, we stopped at a significant exposure after down day on July 11th. So, we've been laying low for the better part of 2 to 3 weeks here, raising stops and trying to limit losses where in positions that saw very little follow through. And as far as what to look for in a market bottom, every pullback is different, but after a significant correction off the highs, we're looking for the price action to eventually settle down and stop making lower lows on the daily chart. And then we want to see a move up where the price action eventually respects and holds the 8-day EMA. As it did here in April, we want to see the price recover, get back above the 8, but then hold the 8-day EMA where it finally does so around here in May. And then, eventually the price will reclaim the 20 and then the 50. And that may not happen on the first shot. For example, QQQ back in August of 2023 reclaimed the 8-day EMA, then stalled, and then sold off back down again. So it's possible we could see a failed rally attempt or one or two during the current correction. But again, that's why we want to wait for a follow through day and then take on some exposure and then see what happens. If those positions work out, then we add on more exposure. If they don't work out, then we back off on exposure, and maybe we're forced out and we have to wait for new setups to emerge. In that situation, we have to be extremely fluid and go with the market. If the market tells us to put on more exposure, then we add more exposure. If not, we're stopping out of positions and going back to cash. So again, we're just looking for the price action to stabilize, stop making lower lows on the daily chart, and then push higher and then reclaim an 8-day EMA, hold above the 8. And then we look to our watch list and see what's out there, what's setting up, what could be in play, and go from there. And of course, what we're trying to do here is after a rally, what we want to do, the ultimate goal is to give back as little as possible without selling out though. So what I mean by selling out is that you take, for instance, we have this run up here and the market starts to sell off. If you exit out of all your positions up here, market pulls back and then rips higher. You could say you can re-enter everything, but can you? I mean, it's tough. Sometimes stocks, will rip higher pretty quickly after a bounce, and then the entries are tough because there's no logical stop real close by, so maybe the stops end up being 7 to 10% away, rather than 3 to 5. So that's selling out. That's just saying you think the market's done. So although we don't want to give back too much, we don't want to have that sort of a sellout attitude. We want to be able to stay with the uptrend as long as we can. But when that uptrend is over, we want to hold on to the money we just made, the best we can. So we're, running tight stops. We're exiting out of positions that have made no progress, ahead of the stop, managing the equity curve, really. And we'd like to hear from you guys on how you manage your equity curve when the market pulls back in after extended run, what you do to preserve gains, limit losses. Be sure to post in the comment section below. Okay, market warriors, let's sum up what we learned about the recent NASDAQ 100 drop. The Qs fell 8% from its high, breaking beneath the 20 and the 50-day MA. Our MTG Tribe members kept their money safe, avoiding this big drop. Now we're watching for a fall through day to show when it might be safe to buy again. Remember, in the market, knowing these key levels and having a proven strategy can be the difference between keeping your money and losing a lot. Whether the market goes up or down from here, you know how to handle it. Are you ready to stop watching from the sidelines and start winning in the market? Do you want to be ready for the next big market move? If yes, it's time to join the Wagner Daily Pro. This isn't just a service, it's your chance to trade with the pros. By joining now, you'll get daily stock picks that cut through the noise, clear step-by-step plans for your trades, access to our private chat room where you can learn in real time. Don't wait for the next market crash. Go to morpheustrading.com now, press the stock picks link, and join the Wagner Daily Pro. Be part of the MTG Tribe that just saved their money and get ready for the next big opportunity. Now it's your turn. Leave a comment below. Did you see this market draw coming? Did you lose money? Or were you safely out of the market? Your story could help another trader learn. Remember, in trading, we never stop learning. Every day is a chance to get better, keep improving, keep growing, and always trade with confidence. We'll see you in the next video with more ways to beat the market. Also, before you go, watch these 2 videos on your screen. They'll teach you how to find great trades that most people miss. Until then, stay alert and always remember, be what you see, not what you think. Your future success depends on it.